So I was a private client broker for a long time, investment advisor, dealing with mostly retail institutions. Did that for about first 15 years of my career. 7 to 10 years ago, I broke out into the venture capital space. Started with mining, which is just a bore, but now I kind of do funner stuff like longevity, anti-aging, and things like that.
So you look so young this time.
Yeah, right. Trying to keep up with you, man.
No, bro. Nothing like that. So one thing, bro, that everybody's struggling to find out is like, make this what's happening in the world right now make sense. Like, this tariff thing.
It's a confusing time, right? Yeah. Like, I think a lot of people had a hope for the new administration to come in and be pro stock market, pro business, and really get things going. But it's sort of been the opposite. It's usually when you want to do tariffs, and tariffs makes a lot of sense for the United States in a lot of aspects. Usually they're a long-term plan where they start with 10%, 20% over a gradual time, years go on, so that supply chain companies have time to adapt. But these were done in such a shocking manner that it kind of threw the world into a array.
Wolf, markets are tumbling as investors are really digesting worse than expected tariffs.
An economy that is right now flashing red in a state of mortal danger.
Right now, you know, the capital markets and the stock market is kind of not liking these tariffs today. And you can see by the administration that Trump's ratings have kind of fallen off because of this. What it really is, it comes down to, since 2008, the stock market and the gains, all of our wealth has sort of been fake. It's been driven by cheap money, government bailouts and grants, and free money. Cheap money and free money. So what's happened is, in a lot of ways, our middle class in North America has eroded. So the wealthy have become wealthier and the middle class is gone. And that's pretty bad for society in general. I think everyone would agree with that. And so there's a lot of talk about why Trump's doing it and why the tariffs are doing it. And in an effort, really, it is to make the US economy strong. He wants to bring back the middle class to the United States through manufacturing and, auto, bring all the jobs back, get them productive as a society, because as a society, both Canada and North America and the United States, we haven't actually had any kind of real growth. We have no industry. Everything's kind of outsourced. And we bring all these things in from other countries. So he tried to forcefully make this happen overnight. Now those things don't happen overnight. And that's the challenge that we're seeing in the stock market and more importantly in the bond market. So to your point, I don't think Trump cares too much that the stock market's coming unglued. You know, that's again, only 12% of people invest in stocks at this point. It's for the rich. The challenge is stock market, sure, he can move it around with the tariffs, but the challenging part that they didn't think about from an administration standpoint is the bond market. So the bond market, you know, US has got record trillions and trillions and trillions of dollars in debt, hundreds of trillions of dollars of debt. And that is a concern to them. They want to get rid of it, and they've done it through Dodge and other aspects, and they feel like they could do it through tariffs.
So one question before. So what people don't know, what bonds would be, what are bonds? Like, people don't know what it is.
So bonds are basically US backed debt.
Oh, okay.
Right? So you can do corporate debt and US debt. For this purposes, we're talking about US bonds. So they have a deficit, they got to finance that deficit, they sell some bonds, they get a percentage rate to them. They're usually a 10-year treasury. What they didn't really realize is that because there's a lot of foreign holders of this treasury, country sovereign wealth funds, it's huge. It's the safest investment in the world is what they consider it, right? So that's why US is able to continue to finance their deficit because they can sell their debt to others. But what happened last week was stock market went down. On Tuesday, it had a historical rally up because the tariffs were all over the place. And then by Tuesday or Thursday or Friday, they stepped back and realized, our 10-year bond prices are crashing. People are selling them like gangbusters. Now, there's a few thoughts on why this is happening, but the prevailing underlying thought is that the Japanese hold the most amount of U.S. debt. Second, only China second.
China second, okay.
Yeah, and their yen got upside down. In an effort to preserve their currency, they hammered $100 billion worth of T-bills in like a span of an hour.
Oh, wow.
Yeah. So that's a prevailing thought. And then everybody else started to pile into it, right? And so then if nobody wants US debt, everyone's selling it, they can't issue new debt. So they had a refinancing risk there.
Oh, gotcha. I understand.
And the currency started crashing. You know, you could argue, well, maybe Trump's winning on the tariff side of things, and the country's decided, wait a minute, we can get you economically because we hold your debt.
Yeah.
And so they started hammering out debt. And then if one person starts and everybody starts getting underneath it, and it becomes a contagion effect.
So essentially, they'll crash the US economy. That's what
their ability to refinance.
Refinance. I got you. So people say, I want to kind of refinance it. Be like, no, thank you. I'm not gonna lend you money because look what you've done to my my aluminum or cars or whatever.
Exactly. Or they want it to be more expensive. So and then makes it harder to service their debt.
That makes sense.